Well, it would be to the extent of positioning, right? I mean, we don't see as from an economics or pure economic standpoint, Greece is still a relatively small economy compared to the rest of the European economy, and as a result, we wouldn't see that much of a real economy contagion. It might be to the extent of financial positioning and the fact that volumes are very low going into year end. So we're not that concerned about contagion at this point.
Well, the short answer is it complicates it a lot. I mean, Draghi has a hard enough time marshaling the support of some of the hawks in the ECB Governing Council. And if you now add this uncertainty in Greece, this makes the January 22nd board meeting, 3 days before the scheduled election in Greece, extremely difficult for him to announce on that day that the ECB is going to buy Greek sovereign bonds as part of a sovereign QE exercise.
Right.
I just think the hawks are going to have a hard time swallowing that.
I think as a standalone product, probably not, but I think it's yet another service in the ecosystem that will drive more market share gains for the iPhone. And in terms of monetization, that's really what matters for Apple. Every 1% increase in iPhone market share globally is another 5 to 10% growth in earnings. You know, all the data that we look at suggests it's been a pretty fantastic quarter for sell-through for iPhones around the globe. One of the easiest things to check is just simply the availability of the phones themselves. And it's still, we're seeing spotty instances of lack of supply in the States here in late December. You know, the last 2 years for the iPhone, by mid to late November, they were pretty much in supply-demand balance. So we're going to see that the sell-in of iPhones this holiday season, I suspect, to be relatively strong, and that'll probably persist into the March quarter as well.